Are you thinking about investing your money? If you are a complete beginner to investing, one of the most attractive investments to get started is unit trusts. Now, if you have no idea what a unit trust is or how a unit trust works, by the time you finish watching this video, you'll know exactly how you can get started. Now, before jumping into the content, this video is sponsored by Capital Alliance Limited. CAL is one of the leading investment banks in Sri Lanka, and also they have a range of unit trust funds which I regularly invest on a monthly basis. Getting started with unit trusts offered by CAL is super simple. Make sure to watch this video till the end and I'll show you how you can get started. Now let's jump into the content. First, let's learn what is a unit trust. Imagine there's an asset that you want to invest but you don't have access to, maybe because it requires a lot of money. Now, what if you get together with a bunch of friends and you create a fund? You can contribute 1,000 rupees, another can pool in 5,000 rupees, maybe one of your friends come in with $1 million, and you create a fund with a lot of individuals. Now, with a lot of money, you have access to some of the assets that you did not have access to as an individual. So, this is essentially what a unit trust is. Basically, a fund management company like CAL, they collect money from thousands of individuals as well as corporate and institutional investors, and they create a fund. And they use this fund to acquire different assets. Now, what are these assets? Well, these assets can be but not limited to stocks. They can be fixed deposits. They can be government securities like treasury bills as well as treasury bonds, and also different corporate debt instruments. And over time, when the assets in the fund appreciates, along with that, the fund value will also increase, and with that, you get to make a profit. So that's how a unit trust works. Now, before learning how you can invest, you need to know that there are a couple of players who are involved in a unit trust fund. So who are these players? First, you have the customer. Who's the customer? Basically, the customer is you, the investor, the one who is going to invest in a unit trust fund. Next, we have the fund manager. The fund manager is usually the fund management company that creates the fund and manages the fund. As an example, if you take CAL, they are a fund management company and they have a lot of unit trust funds under their portfolio. Then there's a party called the custodian. Who's the custodian? Now, all these securities, all these assets that the fund acquires, you need to safeguard and hold them somewhere, right? Well, that's the job of a custodian. The custodian is usually a bank that is independent from the fund management company, and their job is to safeguard and hold the securities that are owned by the fund. Then there's also a trustee for every fund. Trustee is also usually a bank, and their job is to make sure that the fund management company or the fund manager is running the fund according to the trustee deed as well as any other regulations that are applicable to unit trusts in Sri Lanka. Finally, you have the Security Exchange Commission, also known as SEC. They are the regulatory body for all the unit trust funds that are available in Sri Lanka, and they are also the regulatory body for the Colombo Stock Exchange as well. So those are the different players that are involved in a unit trust fund. Right, so I'm sure the next big question you have is, how do you make money in a unit trust? Imagine you are going to invest 10,000 rupees in a unit trust fund where a unit price is 20 rupees. The unit price is sometimes known as the net asset value. Now, if you invest 10,000 rupees in a fund where the unit price is 20 rupees, how many units are you going to get? You are going to get 500 units. That's why these funds are called unit trusts, because when you invest in a unit trust, you are going to become a unit holder. When the assets in the fund appreciates over time, along with that, the unit price will also increase. For an example, let's say you buy a unit for 20 rupees at the beginning of the year, and at the end of the year, the price increases, so the net asset value increases to 22 rupees. Then you have gained a profit of 2 rupees. That's how you make money in unit trust. Now, if you derive this as a percentage, it comes to 10% as your annual return. I see that most people are confused how you make money in a unit trust. They assume that you are going to get a regular interest income every year, similar to a savings deposit or a fixed deposit. But that's not how a unit trust works. Basically, what happens is the unit price will increase over time, and that's the profit, or that's how you make money in a unit trust. Right, now that you know how you make money in a unit trust, the next question is, can you lose money in a unit trust? Well, there's no simple answer to this question. Theoretically, if the value of the assets that the fund has invested depreciates or go down, then the unit price or the net asset value will also go down, and along with that, you can lose your money. But this depends on the fund type. What do I mean when I say fund type? Well, when it comes to unit trust, there are different types of funds. You have growth funds, you have income funds, you have money market funds, you have index funds. There are different types of funds, and how you lose money or how you make money depends on the fund that you invest. As an example, if you take growth funds, they invest only in stocks, they invest only in Colombo Stock Exchange, and if the market goes down, if the Colombo Stock Exchange goes down, along with that, you can lose your money or the unit price will go down. On the other hand, there are fixed income funds like money market funds and income funds. These funds mostly invest in short-term fixed instruments like fixed deposits and government treasury bills, and the return that you get from these type of fixed securities is fairly stable. So the chances of losing money in a fixed income fund is fairly low. But as I told you, it all boils down to what are the fund types that you choose. And if you want to learn the different fund types that are available, make sure to watch the next video in this series where I deep dive into all the different fund types that are available in Sri Lanka. Right, so now you know how you make money in a unit trust and how you can lose money in a unit trust. Now, how much do you need to get started investing in a unit trust? Well, the beauty of unit trust is you don't need a lot of money to get started. There are certain companies that require you to invest a minimum amount, but after that, it's up to you. You can invest any amount. As an example, if you take CAL, there's no minimum investment to any of their funds. You can get started with as little as 100 rupees. Right, next let's learn how investing in a unit trust practically works. When you register with a fund management company, they are going to give you a bank account. And when you want to invest, all you have to do is transfer the particular amount, whatever the amount that you want to invest, and inform them, and they will create the units for you. Now, if you take CAL as an example, the process is even easier. When you sign up with CAL, you are going to get access to their CAL portal, and whenever you transfer a certain amount, all you have to do is log into the CAL portal and upload your payment proof or your transfer proof, and they will create the units based on the unit price of that day. Right, so next let's learn how you can withdraw or redeem your money. Well, withdrawing your money is also super simple. All you have to do is inform the fund management company how much you want, and they will sell the necessary amount of units, and they will transfer or they will credit the amount you need to your bank account. Now, if you take CAL as an example, again, it's super simple and seamless because of their CAL portal. All you have to do is log into their portal and create a redemption request. And if you submit this before 9 a.m. Today, then you'll get the fund or you'll get the money on the same day. If not, you'll get it on the next working day. So that's how you withdraw your money from your unit trust fund. Alright, so that's the end of this video. I hope you have a basic idea about what a unit trust is and how a unit trust practically works. Make sure to check out the next video in this series where I deep dive into different fund types that are available in Sri Lanka. Right, now if you are thinking, Nishan, I want to get started investing immediately, make sure to check out CAL. They have a range of unit trust funds and I invest with them regularly. And getting started with CAL is super simple. Everything is completely online. You don't have to visit the office. You can open an account wherever you are. It's completely online. So visit their website and sign up for an account. I'll add the link in the description below. All you have to do is visit the CAL portal and open a free account and you can get started immediately. Right, so that's it. That's the end of this video. Make sure to watch the next video in this series to learn more about different fund types that are available in Sri Lanka. And until that, happy investing.